Hey guys, so another green day, another good day, almost $13,000 trade profit on the day. We were up $15,500 at one stage. We give it a little bit back, but we didn't give too much back, and that's the important thing. So anytime we're in, five-figure territory on a single day, that's a great day's trading. I've set my ambitious goal at $5,000 a day because I want to. My current ambition, or my current target, is to have a seven-figure trading year, and breaking that back down, seven figures across the trading year. I want to be having $100,000 a month. That gets me to 1.2. And if we're getting $100,000 a month, that works out at $5,000 a day. So that's the goal. So if I'm doing more than double that on a single day, I can only be happy. The fact that right now we are green on the month to the tune of about $40,000 is an achievement in its own right. The reason I say that is that I keep going back to the fact that we dug that hole at the beginning of the month, the beginning of April. First couple of days of April, we had red days, and one of those was a significantly large red day, and it just set us back on the month. And you've got to understand that risk management is key. If I'd managed my risk better in that first day, we'd have been and continued to trade the way I did for the rest of this month, we would be probably in six-figure territory by now. Well, ifs and buts and maybes, I didn't. So we had to trade our way out of that hole, and it's taken me over 3 weeks to do that. So just be mindful that risk management is one of those key essential ingredients to being a profitable day trader. And not many people are profitable when they do day trading. So 85% of people that trade stocks or equities on the stock market lose money in the long term. Most people who trade, if you include all instruments, the likes of Forex and crypto and futures and everything else, most people lose money. So 95%, the number actually goes higher, and 95% of people lose money. And a large part of why they lose money is they don't manage the risk. They don't manage their risk in a professional and sustainable way. They approach the markets with a gambling mindset, and that's probably one of the worst things that you can do. So, risk management, a defined, clear trading strategy, it really is essential to be profitable. Now, today, as I've already mentioned, a good day. T-Stamp was the stock that made the majority of the gains. I'm going to go into the trade in just a second. And it was one of those easy traders. Again, one of those easy traders that I like to say. And we went in with some big size. We felt that limited risk. We knew what the risks were, so we went in with some big size, and as a result, it paid off. It doesn't always, so you've got to manage your risk accordingly. But today was one of those days it paid off, and we had the equity to do it, so that always helps as well. But I'll go into the trade itself. I'll cover the trade itself and enjoy that. Before I do, just remember to hit the thumbs up button, subscribe to the channel, and if you'd hit the notification bell and were already subscribed, you would have got a notification when I went live this morning, and you would have been able to watch me do this trade live on stream. But if you didn't, and you aren't, that's why you didn't get the notification. So enjoy the trade recap, and I will hopefully see you tomorrow, next trading day, live. See you soon. Okay, so the company we traded today, we traded three stocks today. We traded T-Stamp, which was the one we made most of our gains. It was the first stock we traded, and it was IDAI is the ticker or the trading ticker that it trades under. And T-Stamp was gapping up on really good news. It had just released a new product, a new biometric multi-factor authentication solution. which from a technology point of view is always a good, a good catalyst to get behind. Now, it had been moving up pre-market. It moved up around 5 a.m. Market time, as you can see here. It popped up. At this moment in time, it then moved back, and I'd seen that this was on the scanners when I first came to my desk, and I couldn't see anything. I couldn't see anything for reasons why. There was no catalyst. So when it popped up again, moved above the VWAP, I was kind of thinking, well, why is that? It was good volume too. It was good volume when it popped up above the VWAP. It did have a bit of a consolidation and then moved back below the VWAP. And then at 8 a.m., we got the news announcement about this new product, this new biometric multi-factor authentication. So that's when it's sort of moved up, and that's when I got in. So I was looking for the break here, the $250 level, and we got in. We took an initial starting position for the move up. We broke the VWAP. Clearly, I'd seen that the catalyst was a good one, so we took our starting position. We got in at 5:30. We took 2,500 shares. We added on the way up. We added 5,000 shares on the way up. Then we started taking profits as it popped up and broke $6. It then came back down, and we started just trading the range that it was trading in. And it was fairly reliable, and it kept coming back down to meet the VWAP. Every time it met the VWAP, I would add to the position for the move up and take profits. And then I would add to the position for the move up and take profits. And that was kind of par for the course. Coming into the open, we were already substantially up at this particular time. I was holding position. We were a little bit down. I think my average position at this stage was around 630, 640. So we were a little bit down, but I was holding because it had been so reliantly, using the VWAP as support. So as we came into the open, textbook gap and go. So as it moved up past the VWAP, I got in big size, added to the position, took some profits on the way up, added more, again, took some profits, added more, and took more profits. Came all the way back down, we added to our position, took profits on the way back up again. This time when it started to pull back, we exited the position and we didn't trade that any further. And it just started to look weak. Certainly on the 1 minute time frame, we were starting to get that impression that with the volume subsiding, and we were getting consistent lower highs, lower lows. So we can see that the trend here was lower highs. So we decided, okay, we're not going to trade this anymore, and we moved elsewhere. But we were already $15,500 up on the day. We did jump into SWVL. Now, SWVL was an interesting one because it hit the scanners with momentum. It wasn't a gap and go. It hadn't been really gapping up that much pre-market, but then it started to move up and hit the scanners, and then it went into a halt. When it resumed, it halted up, and we watched it move all the way up, and then it came back down and halted down. It resumed again. It moved up, and it had another halt. So this is where we got in for the break of these highs. Where we didn't go look for the high of day, the extreme highs. We were looking for this where we had the double top here. We looked for the break of highs. We moved in. We added to our position on the move up for the break of $11. And when it pulled back fairly quickly. So we exited half of our position there. It continued to pull back, so we exited the rest. That was a little over $2,000 in terms of loss, because we went in with a smaller size, and when we added, it was a much bigger size. So we didn't trade anything else for the rest of the day until Power Hour. And when Power Hour came around, that was really the only thing we traded. And I want to show you this setup on Power Hour for NKTX. This is we took a small loss here. So this is the 5-minute chart. You can see here the previous day's closing price. It drops below that at 1830, all the way down to 1750. We get a lovely little pop up to 1810, back down to 1750. Double bottom, classic double bottom setup. The George W. Bush, if you will. So I'm looking at the pattern, I'm not looking at the time. So the time, I should have been paying attention. And we get in for the break of this at 1810. That's where we get in, and we've got 5 minutes to the close. So not even 5 minutes, it was about 3 minutes to the close. So we were holding this to the close. I decided to exit the position because of the drop off in volume you get in after hours. It just, and of course the widening spreads. It just seemed like too much risk to hold it further. But lo and behold, the technicals, you can't argue with the technicals. The technicals were on point. So we get this double bottom and the move up. So the high of the double bottom is 1830. It comes down. We get our entry price, the confirmation as we move up, and it goes up to 1830. So from a technical perspective, it was on point. This is why I say it's important to learn how to read the charts, learn how to do technical analysis, spot areas of support and resistance. If you can do that, you get to spot these patterns. Now, on the 1 minute, it wasn't as clear and obvious, but on the 5 minute, you tend to find these patterns, they become more reliable on the higher the time frame. But of course, the risk becomes a lot bigger because the range is a lot bigger on the wider time frames. So just learn, if you learn how to read the charts and spot the patterns, it goes a long way in terms of being able to become profitable. So that was today, Thursday, the 28th of April, a good day. And we always like to finish a month green. We always like to finish the month with a green day, a green week. And we like to finish the month green, as I say. And it looks like that is going to be the case. So we started today with $62,000 worth of equity. We've got $12,000 to add to that when that settles. So that'll hit the account tomorrow. And that will give us $74,000 to play with, plus the margin that we get on that. But when you think we started with $30,000 worth of equity, I think it was 32 at the beginning of the month. We lost the majority of that, and we at one stage on the 8th of April we had $4,200 in terms of equity position. So from here, from the 8th of April to here, we've gone from $4,200 to $74,000. So almost 70,000 gain. Now that's not 70,000 profit because of the earlier loss, but 70,000 gain in effectively 20 days. And not even 20 trading days, but that's 20 calendar days. So I keep kicking myself about digging that early hole, and keep thinking to myself, I should have managed my risks better at the early part of the month, because if we traded the same way, but we'd not lost that big loss, made that big loss at the beginning of April, we would very, very conceivably be at six figures on the month this month. So, you know, easy come, easy go, I think is the terminology that, you know, one of my other fellow traders likes to say. I don't count the profits or the gains as gained until the end of the month when I take my profits. It is a process. I've got to look at this as a career. It is my job. It is a career. And if you're a salesperson, you have targets to meet. If you get a big sale at the beginning of the month, you don't stop working for the rest of the month just because you've hit your quota early. Same thing, if you lose a lot of sales at the beginning of the month, you don't give up, and you don't ask for a reduction in your quota. just because you've lost a few sales and you've got a poor pipeline at the beginning of the month. You work hard to build your pipeline. You work hard to close more sales and get back on track. So that's what we've had to do this month on trading. We've got our goals. We've got our targets for each month. Can we get to six figures this month? I think it's increasingly unlikely, but we'll do our best. We'll do our best. We've still got 8 months of the year left to do. Are we on track to hit our seven-figure goal? Based on where we are right now, a little over $300,000 gained in terms of profits on the year to date, and we're 4 months in. So we've got 2 more sessions like that, and that's a third of the year gone. So we're a little bit behind, just a little smidgen behind. So we're tracking to a $900,000 year, which is more than we did last year. But it's still shy of that seven-figure number. So we're not giving up. We're going to try our hardest. We're going to see if we can have a six-figure number next month, and look to get back on track for that seven-figure year. Let's see if we can do it. Hope we can. In the meantime, have a good evening.